Okay, so basically today's agenda is to solve every level 1 question for CVP analysis. I know most of you have already solved level 1 question and you don't have a like much doubt in your level 1 question, but uh, if you have, let's say, some doubts in marginal analysis right now, or maybe for CVP analysis, but in level 2 and level 3, you can anytime book a one-on-one doubt solving session for that on Saturday, Sunday, and maybe sometimes Thursday and Friday. You can connect with me for that, right? And we can decide that time mutually. But for this MCQ solving session, I want to give time for every level, right? We have to take everyone's needs into the consideration. So we'll start with level one today. I guess we have some 70 to 80 questions in level one, and in level two, we have 45 something questions. How many of you have already solved level two? Krishna?
Yeah, it's all.
So how's the difficulty level? Have you seen some change in difficulty level from level one to level two?
Yes, there
Okay.
were difficulty तो है.
और लेवल थ्री ट्राई किया क्या?
हाँ, लेवल 3 भी ट्राई किया. लेवल 3 में ज़्यादा क्वेश्चंस तो नहीं है, बट हाँ, उसमें भी डिफिकल्टी है. मेनली कॉन्सेप्ट तो वही है, बस क्या है क्वेश्चन, मतलब वो जो क्वेश्चंस जो
ट्रिकी
उसमें
होता है.
घुमाते हैं ना, तो उसमें थोड़ा इश्यू है.
ओके, सो बेसिकली मेरे को ऐसा फील होता है कि लेवल वन, लेवल टू, लेवल थ्री अभी मैंने चेक किया, तो जितने भी क्वेश्चंस हैं वो गुड इनफ है टू कवर योर इंटायर सीवीपी एनालिसिस. आज की क्लास में हम ऑब्वियसली बहुत सारी चीज़ें डिस्कस करेंगे कि कैसे क्वेश्चन को अटेम्प्ट करना है, क्या शॉर्टकट हो सकता है, कौन से कॉन्सेप्ट्स हम लोगों ने कॉन्सेप्चुअल लेक्चर्स में सीखे थे एंड अब हम उसको कैसे अप्लाई कर सकते हैं, राइट? प्योर एप्लीकेशन पार्ट. बट इसके बाद आप लोगों के पास एक सेक्शनल मॉक आपको अटेम्प्ट करना पड़ेगा फॉर सीवीपी एनालिसिस. वो बहुत ज़्यादा हार्ड होगा. तो मेरे मेरे ख्याल से तो वही आपके एक ट्रू अंडरस्टैंडिंग बता पाएगा कि इस टॉपिक के लिए क्या है सीवीपी एनालिसिस के लिए, राइट? लेट्स वेट फॉर वन मोर मिनट एंड वी कैन स्टार्ट देन. किसी को कोई फीडबैक देना है कि क्या क्या चीज़ इंप्रूव कर सकते हैं, क्योंकि पिछले 2 हफ्तों में मेरे ख्याल से बहुत सारे स्टूडेंट्स ने फीडबैक दिया कि ये चीज़ ऐसे इंप्रूव हो सकती है, तो हम उसको टाइमली इंप्रूव कर रहे हैं. मेरे ख्याल से एक अच्छा प्रोग्रेस है वेबसाइट के ऊपर कंपेयरिंग टू 2 वीक्स बैक, राइट?
हेलो.
हाय अमित.
हाँ सर, मेरे को ये डाउट है कि अब अगर हम एमसीक्यू प्रैक्टिस करते हैं ना.
हम्म.
हेलो.
आपकी आवाज़ ब्रेक हो रही है अमित.
अगर वो तो हम लेवल 1 पे हेलो.
यस प्लीज.
हम लेवल 1 एमसीक्यू सॉल्व करते हैं ना, वो पीछे नहीं जा सकते.
हाँ, ये मेरे को शायद पता नहीं किसने बताया,
अगर
किसने बताई थी ये चीज़ आज. किसी ने मेरे को सेम चीज़ बताई आज और मैंने भी ये फील किया. मैं अभी क्वेश्चंस देख रहा था, लेकिन वहां पर तो प्रीवियस और नेक्स्ट क्वेश्चन पे जाने का ऑप्शन ही नहीं है, राइट?
हाँ
हाँ,
सर,
तो तुम में से किसी
वो
ने भी
ऑप्शन लेके आने का बोल रहा हूँ.
हो गया, डन है वो. अभी जाके चेक करोगे आप तो आपको मिल जाएगा वो. आई डोंट नो कौन
हाँ,
था, शायद अलमास.
ठीक है सर.
अलमास था वन ऑफ आर स्टूडेंट, तो उसने मेरे को सेम चीज़ बोली कि प्रीवियस और नेक्स्ट पे जाने का ऑप्शन नहीं है. तो मैंने उसको बोला कि रॉन्ग ऑप्शन सेलेक्ट करो. अभी यू कैन म्यूट योर सेल्फ.
तो
सो बेसिकली मैंने तो उसको बोला कि रॉन्ग क्वेश्चन अटेम्प्ट करो एंड यू कैन मूव फॉरवर्ड. बट लेकिन अगर मुझे स्टार्टिंग के 10 क्वेश्चन ऐसे मिलते हैं जो मेरे को नहीं आते हैं, राइट, मैं बार बार रॉन्ग क्वेश्चन को अटेम्प्ट करके अपने आप अपना जो जोन है मेरा, मैं उसको डीमोटिवेट नहीं कर सकता, राइट? तो अभी प्रीवियस और नेक्स्ट दोनों दिख जाएंगे. आई शेयर माई स्क्रीन. आई गेस वी कैन स्टार्ट नाउ. सो यू कैन सी नाउ वी हैव अ प्रीवियस एंड नेक्स्ट ऑप्शन. बिना क्वेश्चन को अटेम्प्ट करे भी हम लोग आगे जा सकते हैं, राइट? एंड सेम गोज फॉर प्रीवियस. So I guess we are good. Let's start with our CVP analysis, level 1 questions. So basically, our topic is decision analysis, and our subtopic is CVP analysis and level 1 standard. Perfect. Done. ओके सो मेरे को एक और क्वेश्चन आया था आज की जैसे हम लोग क्वेश्चन स्टार्ट करते हैं एंड समटाइम्स यू फील दैट दिस पर्टिकुलर क्वेश्चन इज नॉट अ level 1 question, right? It has some kind of concepts or some kind of complexity which relates from like level 2 or level 3, right? And it's hard for you. So what you can do is just skip the question. You don't have to feel that you don't know the concept, because if you see any other question, right, in level 1, you will see these one liner questions, right, and just a basic normal one time calculation questions. So whenever you are seeing this kind of question where you have to calculate something, analyze something, you can just skip it, right? You don't have to think, okay, I am not that good enough with my concepts that I'm not be able to solve this, that's why I have to do this next. It's just a question. So you have to make your mindset like that, that it doesn't matter if you're skipping some kind of a question, right? So I guess we can start. I'll not go in this order one, two, three, four. I'll select the question first. Okay, we'll start with from very basics. We are going to cover. I guess we have 74 question. We're going to cover every question for level one, but we'll start with something basic and then we can level up. So first question is, all of the following are assumption of cost, volume, profit analysis except. Okay, you will see a lot of question in theory with the except. Okay, or which one is not true, right? Which one is not uh, acceptable for the company. You have to choose a wrong option. So be careful whenever you are solving theory question, whether you have to select a correct option or you have to select a wrong option which is correct in this scenario, right? So we have to read all of the options. So I'll start with option number D. Sales mix for multi-product situation do not vary with volume changes. That's true. Whenever we are solving multi-product calculation, right, where we have two products and more than two products, we have to take a constant sales mix, right? That's our assumption for CVP analysis. Next, if you see uh, option number C, variable cost per unit change proportionately with volume. Variable cost per unit will can never be changed, right? Total variable cost can be changed, and variable cost per unit is always be constant, no matter how your volume is fluctuating. Next, we have revenue change proportionately with volume, which is true. Total fixed costs do not change with a change in volume. Anyone wants to try? Anyone wants to try this question?
ऑप्शन सी।
सी।
रीजन के साथ, रीजन के साथ।
बिकॉज वेरिएबल कॉस्ट पर यूनिट की
रीजन वही है कि वेरिएबल कॉस्ट
Yes. So basically, the
चेंज होता है।
reason is variable cost per unit can never be changed in proportion with your volume. So answer is option number C. Let's move to question number second. We have see how I read any question. I don't have to read from top to bottom, right? I just need to have the understanding what I have to calculate first, right? So basically, in this particular question, I have to calculate if Carson wants to achieve a net income of $1.3 million next year, its sales must be. We have to calculate sales, okay? For this, let's use our whiteboard. First, create your syntax: sales minus variable cost minus contribution margin minus fixed cost and your operating profit. Because we are learning right now how to apply the concepts, that's why we have to do uh, go with from a long cut, right? But once you have that instinct how to uh, pick the only variables you need to solve that question, you can use that shortcuts, right? So first of all, for sales, we have $100 sales price per unit. For variable cost, we have $75. So my contribution margin is $25. This is my contribution margin per unit. Now my fixed cost is 250k, 250k dollars, and my effective tax rate is 35%. So we have to change this operating profit to pre-tax profit first because we have tax with us. My tax is 35%, and then I will be left with my after tax profit. Now, Carson wants to achieve a net income of 1.3 million next year. So I want to achieve 1.3 million, which is 13 lakh in Indian rupees. So firstly, whenever you have tax in your question and you have to uh, convert after tax amount into a pre-tax figure, what you can do is basically I'll show you first the concept, how the concept works. So this is your pre-tax income, right? Pre minus you have to deduct a tax from it. And how you're gonna calculate tax? Your pre-tax amount, whatever your final profit after deducting fixed cost from contribution margin, you have to multiply this pre by your tax rate, which is 35%. We can write 0.35 and you can use 35 by 100 as well, right? So this will be your calculation and you will get after tax figure from this particular derivation, right? Now from this pre-tax profit, we don't have this number. We can take it as x minus x multiplied by 0.35 is equal to your after tax profit. Now you can take x as common. Now you have 1 here minus you have already taken x as common, you can write 0.35 is equal to your after tax profit. Now you have 0.65, right? If we deduct 0.35 from 1, we'll left with 0.65 multiply by this x and is equal to your 13 million. Perfect. Now x is equal to 13 million divided by 0.65. I need to use calculator for this. Just a second now. So my answer is 2 million. I have divided 1.3 million divided by 0.65 and my pre-tax figure is, because I have taken pre-tax figure as X, so my answer is 2 million. Perfect. Now I can do my CVP analysis. This is just normal arithmetic, okay? And I'll show you a shortcut as well to calculate this 2 lakh rupees. Whenever you have after tax profit, okay, let's start with our syntax was this is my pre-tax profit, right? When I have my total contribution margin with me and I reduce my fixed cost, right? Contribution margin firstly should cover my fixed cost, then whatever is left should be go in this pre-tax profit. Once I have any number in pre-tax profit greater than zero, I have to pay taxes to the government. Now in question, generally you always have the tax percentage, effective tax rate, and once you deduct your operating profit, pre-tax profit from your tax, you will live with your after tax profit. So to do this, you can take this pre-tax profit as 100%, right? Now from this 100%, if you reduce 35% of the amount, you're left with 75%. Now you just have to take your after tax profit number, which is 1.3 million, and just divide by the 65, not 35. My bad. Okay, when you reduce 100 from 35, you're left with 65%. And you just have to divide it by the percentage of the 1.3 million amount, and you will come up with 2 million very quickly. Perfect. So you can use this shortcut very easily. Just see that my tax rate is 35%. If I reduce it from 100%, which is my pre-tax profit, I am left with 65%. I just have to divide my uh, after-tax profit number by the remainder of that particular percentage, right? So it will be very, very quick. And I guess you know how the derivation works. So right now, I have my pre-tax profit with me. Now I can do my calculation. So I have to calculate sales. Okay, the total amount of sales means revenue. Now I have pre-tax amount which is 2 million. Let's do this in a like reverse engineer mode. I have 250K. My sales price is $100. My variable cost is $75. My contribution margin is $25. I have to calculate uh, how many units I want to sell, okay, in order to achieve this number. So for target calculation, we have a very, very simple formula. We just have to take fixed cost plus my pre-tax profit number in the numerator, and I have to divide it by my contribution margin per unit. Whenever you're calculating anything in volume and in units, you have to take contribution margin in units. If you are calculating anything in revenue, in your target or maybe your break even revenue, you have to take a ratio, contribution margin ratio. Now my fixed cost is 250K and my pre-tax profit is 2 million. Let me calculate it. 250K plus 2 million divided by my contribution margin is 25. So my answer is 90,000 units, which is correct. Meanwhile, you can also start solving this question, okay? And you can just raise your hand and say, I have the shortcut to solve this particular question, okay? And if you have any doubt in the calculation we are doing here, okay, just raise your hand and ask your doubts, okay? Let's make this class interactive. So I guess this question is very, very clear. And in your level one, you can expect these kind of questions. Perfect. Let's move to second question. Okay, again, we have a big question. Let's skip it for now. Let's skip this question for now. Okay, now we can start solving. Okay, whenever you are solving your like first session, your level one question, just try to skip anything which is uh, bringing some analytical portion, right? And start solving short questions first, theory question first, or just a normal calculation based question, and then you can proceed further. That will build a momentum for you. So I guess this previous and next button will be very, very helpful for you now. So you can see again, we have a question. I have to calculate the amount of sales required to earn a 8% after tax return on its investment. Again, we have a after tax return concept. Perfect. So the amount of sales required to earn a 8% after we are doing some investment or what? Zipper company invested 300K dollar in a new machine to produce cones for the textile industry. Perfect. So basically we are doing a investment 300K. That's why we are having a percentage required to earn. So my percentage required to earn is 8%. I can write 8% as 0.08. Perfect. Now, if I have to calculate 300K divided by 0.08, my answer is 3,750K. 3,750K. This is my after tax profit. This is my target. Okay. Now, whenever you have after tax profit with you, you don't have to use any kind of formula to solve your CVP variables. Just Your first step would be to convert this after tax into a pre-tax profit. Now I'll show you a shortcut which we have already learned right in the previous question. I have income tax rate of 40%. So my pre-tax is 100%, my income tax rate is 40%. If I reduce 100 minus 40, I'll come up with 60%. So I just have to divide my after tax number with 60%. Simple maths. Divided by 0.6, I'll come up with 6 million 250K. This is my pre-tax number, and just make sure your pre-tax number should be higher than your after-tax number, right? Normal logic, because we are subtracting something from pre-tax. That's why after-tax is small. So this is my pre-tax profit. This is your step number one. Now I have to calculate amount of sales. It means I can't calculate units. I have to calculate dollar revenue. Perfect. 625K. Okay, now again we can start building our reverse engineer syntax. 6 to 50K. We have a fixed cost before our pre-tax profit. Our fixed cost is 600K. My contribution margin, I don't have any contribution margin right now. Okay, I have a variable cost, which is also in a percentage term. Okay, my problem is already solved. If let's say my sales is 100%, right? Because in the question they have mentioned variable costs are 30% of the selling price, right? So my base is my sales price. I have 30% as my variable cost. So the leftover is my contribution margin. And as my contribution margin number is in percentage, I can say this is my contribution margin ratio, right? Now, if I have contribution margin ratio, now everything is sorted for me, right? I have to calculate break even revenue, and I won't say break even revenue, target revenue. Whenever you are calculating anything in revenue in dollar terms, you always have to take a ratio number. Weighted average contribution margin ratio, normal contribution margin ratio. Just you have to memorize that. And whenever you are calculating units and volume, you have to take contribution margin per unit. Now, in numerator, you have to take fixed cost plus your target pre-tax figure. So my fixed cost is 600K. My target pre-tax target is 6,250K. 250K divided by my contribution margin is 70%, as my sales is 100%, my variable cost is 30%. Now I can take 600K. Okay, I'm solving it on a calculator. Please don't use your mobile phone calculator or your desktop calculator. Buy a normal calci, okay, and try to improve your speed. I'll give you some shortcuts as well to use basic calci. I have to buy one first. Right, I am right now I'm solving it my on my mobile phone. Okay, so I have 6,850K as total in numerator. I have to divide it by 0.7. Okay, I am getting 9785714. I don't have anything in option. Let's see if we have some, we have did some kind of a mistake. So my sales is 100%, right? Because I don't have any number for sales. My variable cost is 30%. So my contribution margin ratio is 70%. Fixed costs are 600K. Okay, so the only number we have to check is pre-tax profit. Let's see the calculation again for pre-tax profit. We have a investment of
3 लाख 3 लाख इंटू 0.08 करेंगे तो 40K आएगा, सॉरी 24,000 आएगा
3 लाख
आफ्टर
इंटू
टैक्सेस।
0.08 करके
हाँ, तो 24,000 आफ्टर टैक्स आएगा, एंड 24,000 डिवाइड बाई 1 - 40% करेंगे तो 70% आ जाएगा। सो 40,000 प्लस 6 lakhs फिक्स कॉस्ट डिवाइड बाय CMR रेशियो 70% करेंगे तो हमारा आंसर आएगा 914286।
ये 3.75 मिलियन का कहाँ से आया फिर? हम लोगों ने क्या कुछ किया था क्या इससे पहले? नॉर्मल 300 के इंटू 0.08। ओके, परफेक्ट। कृष्णा, 300 के इंटू 0.08 24,000 आ रहा है। ओके, माय बैड। Okay, let's solve this again. Uh, we have 300K as an investment. Okay, I'm taking this 100K which we have already invested here, and in this 300K, I have to calculate 0.08 because we have a 8% after tax return. If I multiply my 300K with my 0.08 percentage, uh, I'll have 24,000 as my answer. Now, if you see, you have income tax rate of 40%, your pre-tax is already 100, so your after-tax profit percentage is 60%. You just have to divide 0.6 to your 24,000 and divide 0.60. Right, Krishna, we have 40,000 as our pre-tax profit. Now, everything remains constant. We just have to change this 625K to 40,000. Now my answer will be 600K plus 40,000 divided by 0.7, which is 914,285.7. So if we do a round off, this should be our answer. Perfect. Nice, Krishna. Okay, anyone have any doubt in this particular question? Please feel free to ask anything, any calculation. Okay, let's move on to next question. Perfect. Again, a level one type of question. Break-even quantity is defined as the volume of output at which revenues are equal to. Okay, anyone?
टोटल कॉस्ट।
Perfect. So basically, if you see our syntax of variable income statement, we have sales. Sales is nothing but a revenue. Okay, if you see in dollar terms, so total sales is total revenue. You have to deduct one cost, which is your variable cost, which fluctuates with your volume, your output. Then you have contribution margin, which is just a leftover of your revenue after deducting one type of a cost. Then you have to deduct your second cost, which is your fixed cost. This is your second cost. Then again, you will left over with, if you have some amount left, you will left over with your pre-tax profit, operating profit, right? So revenue is nothing but your sum of total cost, which is variable cost and fixed cost, considering we are talking about a break even quantity, right? At a break even point, we have $0 as my profit. So this sales amount should cover, let's say, 30% of this and 70% of this. The sum should be 100. So every time you have solving break even type of question, you need to have that understanding that my total revenue, my total sales will always be equal to two cost, variable cost plus fixed cost. Perfect. Again, a right answer. Nice. Next. Okay, perfect. Now we have to calculate the tents manufacturer margin of safety. See how we are solving the question. First, we have to have a understanding what we have to solve, right? I have to calculate margin of safety. If you guys know, the formula of margin of safety is your planned or budgeted revenue, your planned or actual or budgeted. You will see these kind of three terms in your question: planned, budgeted, and actual revenue minus your break even revenue. Break even revenue. So we need two variables. Okay, let's see what we have in our question. I have a total fixed cost of 145K. Perfect. My fixed cost is 145K. We have to use it, I guess. We have projected sales. Okay, projected sales, planned sales is same. So my projected sales is 510K dollars. Then I just need to calculate my break even revenue. For break even revenue, my formula is simple fixed cost plus optional if I have something in target. We have already solved this kind of a question. Whenever you are calculating anything in revenue in dollar terms, I'm repeating it again and again because this is what you're gonna get in your questions every time. You have to use a ratio, contribution margin ratio. Perfect. Now I have to calculate contribution first, right? I have sales price 850. My variable cost is 350, 005, $500 is my contribution margin per unit. I have to calculate it in terms of a percentage. So how we can convert it? 850, 8 because sales is my base, right? You have already seen this in the lectures. I just have to divide 500 divided by total base, which is my sales 800, 0.625. 0.625. Just keep this number with you, 0.625. We don't have any target profit. We have fixed cost, which is 145K. So I'll use 145K in my numerator plus target profit. We do not have anything related to targets. It's zero divided by my contribution margin, which is 0.625. My answer is 232,000. Okay. My break even revenue is 232,000. Perfect. 232K. My planned revenue is 510K. I just have to do a subtraction now. 510K minus 232,000. Okay, we have to calculate our answer in units. Mhm. Okay.
850 अगर -350 करेंगे हम,
हम्म
सॉरी सेल्स माइनस वेरिएबल कॉस्ट,
हम्म
तो हमें अपना सॉरी यूनिट्स में तो आंसर मिल ही जाएगा अपने को,
हम्म
क्योंकि परसेंटेज इसमें निकालने की जरूरत नहीं है अभी।
हाँ, actually, I thought we have to calculate our break-even revenue because, okay, so we can use the same thing, just add two of the inputs, okay, two of the variables should be in the same line. If I'm using planned output, right, planned units minus break-even units, I'll get my margin of safety in units only. Earlier, we have used everything in dollar terms, planned revenue and break-even revenue. So my MOS, which is a subtraction of 510K minus 232K, should be in revenue terms. Okay. So just make sure your two of the variables are same. Now you can see your projected sales is 510K, right? What you have to do first, you have to convert your 510K in unit terms. How you can do that? 510K divided by your sales price. You'll get your units, right? 850. 600 is your answer for your planned units minus your break even units is very, very simple. Now you have to calculate break even units, which is fixed cost divided by contribution in units. Perfect. Your fixed cost is 145K divided by your contribution is 500. So you're left with 290. If you deduct 600 into 290, you will left with 310. Perfect. Anyone? Any doubts in this particular question? Simple margin of safety. Done. Okay, let's see. Now again, we have one more question with us. I have to calculate Silverstone's profit for this year. Okay, so I need to calculate something here, operating profit or maybe pre-tax profit, because I don't see any tax percentage. Operating profit. Now let's do the reverse engineering. Fixed cost is 120K. Okay, you can see fixed cost were 120K. Your contribution margin, you don't have any contribution margin directly, you have to calculate it. So your sales minus variable cost, sale is 450K and your variable cost is 270K. For the current year, sales are forecasted at 500K. If the fixed cost do not change, okay, we have to do a comparison. First, let's calculate your contribution margin ratio. If you reduce 450K, and you don't have to calculate this number as well, I'll give you a shortcut. We need a percentage for contribution margin, right? But if we have this number, variable cost, if we have this percentage, if variable cost is 30% of total sales, my contribution margin is 70%. So I don't have to do two steps. First, get the dollar terms for contribution margin, then use it for the calculation of contribution margin ratio, right? What I can do, I can just calculate the percentage for my variable cost, which is 270K divided by 450K. Let me do the calculation. 270K divided by 450K, it's 0.6. It means this one is 60%, so my contribution margin is 40%. Simple. Now we have everything with us. Now you can see the current sales are forecasted at 500K. Sales are increased from 450K to 500K, and fixed cost will not change. It is mentioned explicitly in the question. But what we can do is 500K is my sales. I don't have to calculate my variable cost as well because I have my zero point 0.4 contribution margin with me, which is nothing but if we multiply 5 with 4, I don't have to calculate as well. It is 200K dollars, right? This is my total contribution margin. What is my fixed cost? My fixed cost is 120K. My answer is 80K. This one is my answer. Perfect. Easy. Let's proceed to next question. Again, a easy question, level 1 type of question, 2 lines. If the total contribution margin increase by $1,000 operating profit. Okay, I'll show you some logic for this kind of question. This is my operating profit. Okay, this is my fixed cost. This is my contribution margin. If this is fixed, okay, let's say this is fixed. This do not have any kind of value operating profit, right? If we do not have any tax, otherwise it's just a leftover for everything we have on the top side. We have sales, we have variable cost and contribution margin. If variable cost is also fixed, right? My total fixed cost, including variable and fixed cost, right, will be constant. If I increase 1,000 rupees here, okay, what do you think? My contribution margin will also increase by $1,000. I'm talking about total contribution margin, not per unit, right? So if I increase my $1,000 here, if my fixed cost is also fixed, my operating profit will always be increased by the same number. So you have to have this understanding that if your costs are fixed, your costs are constant, whatever you are adding at sales will be same for your contribution margin. Whatever you are adding, increasing or decreasing in your contribution margin will have the same impact for your operating profit. You will get this kind of question, right? You can't learn these things in your conceptual lectures. That's why it's very important to understand everything from the MCQ point of view. So a question asks total contribution margin increases by $1,000, which means that this number is increasing by $1,000. What would be the impact on operating profit? We do not have anything, any information about cost, so it means the costs are gonna be constant. So you don't have to calculate anything for this thing. That's what I meant. So it will increase by more than 1,000? No. It will decrease by 1,000? No. It will remain unchanged? No. Increase by $1,000. Perfect. I guess I am making sense. Let's proceed to next question. I have to calculate Wilkinson's income would be. Okay, let's see what we have. Wilkinson sells a single product, $30 per unit. This is my sales price. Contribution margin ratio is 45%. I don't have to calculate variable. My end goal is to calculate contribution margin per unit or contribution margin ratio, whatever I have. So 30 multiply by 0.45. Okay, you can see I have contribution margin ratio of 0.45, which is 45%. I have sales price mentioned in my question $30 per unit. I am just multiplying this 30 by 0.45. So my answer is 13.5. in dollar terms. Perfect. Now I have fixed cost as well, which is $10,000. Perfect. Perfect. I have $10,000 fixed cost. If 3,000 units are sold in the current month, what would be the income? Simple question. Just multiply zero point 0.5 by your output. You will have total contribution margin. Then just deduct your total fixed cost. You will have your operating profit. So 13.5 multiply by 3,000, which is 40,000 for 500, 40,500. Okay, let's forget this 45%. You have to multiply 13.5, your contribution margin per unit. If you sell one unit, you will earn 13.5. If you sell 3,000 unit, you have to multiply it by 13.5, which is nothing but 40,500. If you reduce 10,000 from it, you will get 30,500. Simple. Proceed to if I'm moving very quickly, okay, or you are losing something in the process, please feel free to raise your hand and ask me anything related to the concept and the calculation we are doing on the whiteboard. Perfect. Now, which one of the following option is statement is correct? Now this kind of question is very tricky, where you have to solve something in order to take some theory based options, right? So you have to be very careful on this, on these type of questions. Ticker company sells two product A and product B. Product A contribution margin is $3. Product B provides a contribution margin of $4. It means product B is beneficial for us if ticker's sales mix shift towards product A. Okay, so let's say I am selling 30% of this, 70% of this. They're saying if our sales mix shift towards our low selling product, I won't say low selling product, not in output terms, low contribution margin item. So my overall operating profit is gonna decrease, right? We have seen this entire discussion, entire calculation in our conceptual lectures, how this funda works, right? So my operating profit will decrease if my sales mix shift towards a low yielding product or a low contribution margin product. This is what the question wants to test. Let's see what we have in our question. The contribution margin ratio for product A and product B will change. No way.
सी आंसर लग रहा है.
Operating income will decrease if the total number of units sold remains constant. Perfect, या सी भी हो सकता है, बट थ्योरी में कोशिश करा करो कि तुम सारे ऑप्शन एक बार रीड कर लो. The overall contribution margin ratio will increase. Increase तो नहीं हो सकता है, right? Because what how we calculate overall contribution margin ratio in multiple product scenario, we take the percentage and multiply it by the number. So if you multiply 3 by 0.3, you will get some low number. If you multiply 3 with 100%, let's say 1, you will get a $3, right? If you are multiplying anything with a low contribution margin number, you will get a lower contribution margin ratio overall. So this option is very incorrect. Total number of units necessary to break even will decrease. Okay, कोई मेरे को एक्सप्लेन करेगा ये वाला ऑप्शन, क्योंकि मैं ये एक्सप्लेन करने वाला हूँ कॉन्सेप्ट. एनीवन? ऑप्शन नंबर ए मुझे एक्सप्लेनेशन चाहिए उसका. कृष्णा साबा.
हमें ब्रेक इवन तो निकालना है इसमें से, इसमें
हाँ जी.
मैंने इसको इस तरह से सॉल्व किया था कि हम अगर से प्रोडक्ट ए पे स्विच करें तो उसका कंट्रीब्यूशन मार्जिन ऑलरेडी लो है. सो ऑटोमेटिकली हमारा जो ऑपरेटिंग इनकम आएगा तो वो लो डिक्रीज ही आएगा. तो दैट्स व्हाई मैंने आंसर सी चूज किया था.
ओके. परफेक्ट. ऑप्शन सी करेक्ट है, उसमें तो कोई बात नहीं है, राइट, कोई डिफेंस नहीं है. बट आई वांट टू अंडरस्टैंड व्हाई, what is the meaning of this option number A? The total number of units necessary to break even. Okay, how we calculate break even? First of all, to calculate break even units, okay, I'm talking about units, but same concept applies to the revenue as well. My numerator is fixed cost. If we have some target profit, we can add that as well. Let's make it simple for now. We'll take fixed cost as in my numerator, and I have to divide contribution margin per unit. Normal mathematics, okay? If my denominator will increase, right, my total number will always gonna be shrink. That's how mathematics work. If my numerator will increase, my output is gonna increase. Simple. If my denominator will decrease, indirect relationship, right, my number is gonna be increase. If my fixed cost or my numerator will decrease, my output is always gonna be increase, right? So which means if my contribution margin is 10, okay, and I have fixed cost as $200, I have to sell 20 units in order to get break even. Break even means where your uh, operating profit is $0, your sales is equal to your total cost, which is variable cost plus fixed cost, right? This is a concept. If my contribution margin increases with $10, let's say, fixed cost is same, I have to sell only 10 units. Okay, my units will get halved uh, to achieve the same level, same break even level. So, in this scenario where we have multiple products, product number A, product number B, and contribution margin contributed by A is $3 and $4. If my sales mix shift towards a low contributing margin, my contribution margin per unit and in ratio both is gonna decrease, right? Because we are choosing a low contribution margin item. And if my denominator will decrease, right, so I will get a increase in my break even units and whatever I'm calculating here. Simple mathematics. So if you again look at option number A, the total number of units necessary to break even will decrease. This is why this option is incorrect, right? Because if your total number of units for break even should increase because we are contributing our sales mix to a low selling contribution product, so my contribution margin ratio will decrease, and as a result I have to sell more. I have to sell more product just to cover my same fixed cost. I hope I am making sense. So because of these reasons, I have to select option number C, which is correct. Perfect. Please try to read these explanations as well whenever you are solving questions. Perfect. Let's move forward. We have again two products. Okay, we are using multi-product concepts right now. I have to calculate break-even point in sales dollars. We have to calculate break-even revenue. Whenever you see we have to calculate break-even revenue, just have a uh, like back in your mind, just have a thought that I have to calculate contribution margin ratio, right? Because whenever I see break even units, I have an idea I have to calculate contribution margin per unit anyhow. And when I see revenue, like in this question, I know I have to calculate contribution margin ratio. So subconsciously, I'll try to find the components I need to calculate contribution margin ratio, right? That's how you're gonna increase your speed. So the company sells two products. Product number one, okay, let's jot that down. My sales, my variable cost, my contribution margin. Sales is 12. Let's don't write full numbers. 12, 4.8, and we can calculate our contribution margin. Product number two, sales is 300K, and variable cost is 1.5. Perfect. And then we have fixed cost as well. 5.4 for product number A and 4 for my product number B. Okay, let's calculate very quickly for our contribution margin. 12 million minus 4.8 million. Okay, we have 7.2 here. 7.2 plus 8, 8, 8 plus 4, 12. Perfect. From 3.1.5, we don't have to do any calculation, subtraction here. It's obviously gonna be half. 3 minus 1.5 is 1.5. Now I have contribution margin for number one. I have contribution margin for number two. Okay. I have two options now. I can calculate a weighted average contribution margin per unit, or I can calculate WACM in ratio as well. Anyone wants to propose any kind of a formula for these calculations? How we can calculate this? How to calculate weighted average contribution margin per ratio? No? Okay. So whenever you have to calculate, uh, let's say, because in our option we have to calculate in dollar terms, so I have the clarity. I need contribution margin ratio. Perfect. So if I have to calculate weighted average contribution margin ratio, I'll need normal contribution margin ratio for individual products as well. If you are calculating on for a single product, right, you can calculate a contribution margin per unit, then later on you can convert it into a contribution margin ratio. It will be very, very simple. But whenever you're calculating weighted type of contribution, okay, you can't convert weighted average contribution margin ratio or weighted average contribution unit to ratio very easily. So don't waste your time in exam or whenever you are solving your questions. Just understand whenever you're solving a multi-product question and the question is asking you about revenue, break even revenue, target revenue, you have to calculate WACMR, weighted average contribution margin ratio. Okay, let's see how we can calculate. Now for weighted, we need individual contribution margin ratio. How we can calculate ratio? Just divided by 12, divided by 12, and divided by 12. Okay, we have to divide it by 12 just for contribution. I'm just giving you a insight by we are dividing it by 12 because this is your base number. If you divide 12 by 12, so it will become 100%. It will become some percentage of this sale and this is our leftover. So you can do 7.2 divided by 12, which is 58.5, which means 0.58. You can see for product number two as well, it's going to be 50%, right? Because 1.5 divided by 3 is 0.5. Perfect. Now we have individual contribution margin with us. This is for product number one, this is for product number two. Now to calculate weighted, to calculate WACMR, you need to apply the formula, right? Formula is your contribution margin ratio, which is 0.58 if I'm not wrong. Yes. Multiply by ratio of your product. We do not have this number right now. 0.5, which is the contribution margin ratio for second product, multiply by the volume, right? Sales mix for that particular product. We do not have anything, right? Assuming the product, you can read it here, assuming the product mix and the sales mix remains the same. But we do not have the percentage with us. We have to calculate sales mix right now. Okay, please focus here. You will see a lot of question related to sales mix. So for this, what you need to have your sales for product number one is 12 million. Okay. Your sales for product number B is 3 million, right? Total sales is of 15 million. So for me as a business, total sale is 15 million. Out of this 15 million, 12 million is contributed by product A, right? 3 million is contributed by product number B. Now it's very, very easy for me to calculate the sales mix ratio. Always divide any uh, statement or any kind of a syntax by your total number, you will get everything. So 15 million divided by this, 15 million divided by this. Let me do it very, very quickly. 12 divided by 15, 0.8, and you don't have to write up whole number in your calculator. Just write initials if you have zeros in your question. So it is 0.8. Now I will not do 3 million divided by 15. If my one number is 0.8, my second number is going to be 0.2. Please try to save time for your calculation. Now I have everything for my formula. This is 0.8. This is 0.2. Perfect. Now let me do the calculation. 0.8 multiplied by 0.58, which is 0.464, plus 0.5 multiplied by 0.2, which is 0.1. If I add 0.1 to 0.464, which is nothing but 0.564. So my weighted average contribution margin ratio, WACMR, is 0.564. This is my number. I have to calculate break even point in terms of revenue. Op formula is very simple: fixed cost divided by WACMR, what we have just calculated. Fixed cost is, now we have two fixed cost. Okay, we have to calculate total fixed cost for product number one and product number two. Fixed cost is 5.4 million, 5.4 million, perfect, plus 400K. A lot of difference in both the numbers. Let me recheck. 5450, perfect. 400K, simple. Okay, so I have 5.8 million as my numerator, divided by 0.564. I guess we are very close. uh, Divided by 0.564. I am getting 10283. Anyone solving in the back? Anyone? Any mistake in calculation? Okay, let's recheck. We are calculating WACMR. My contribution margin for my product number one is 12 million minus 4.8 million, which is 7.2 million. If I divide it by 12 million again, shit. Okay, I guess we did some mistake. This is 0.6. Okay, it means 60%. This is not 5.8. This is 60. Okay, let's quickly fix this number. We have to make it 0.60. 0.6 multiplied by 0.8 is 0.48. So we just have to change this number, okay? So it is 0.48. If we add 0.1, it's going to be 0.58. I guess our rest of the calculation is good. 5800001 divided by 0.58. We are getting 10 million as an option. Perfect. Okay. Anyone have any sort of doubt in multi-product analysis? Perfect. Let's move to the next question. Good. Key activity driver in CVP analysis is defined as any factor that drives revenue and variable cost. Total fixed cost can never be a driver. It's a constant figure. Percentage of fixed cost to revenue. Mhm. Whenever you see a fixed cost terminology, maybe in a fixed cost ratio, fixed cost per unit, total fixed cost, it can never be a driver. Driver is something which will increase or decrease your numbers, your sales number, your variable cost, your contribution margin, right? Percentage of contribution margin to revenue. No, it's just a calculation. Contribution margin ratio is just a calculation. Any factor that drives revenue and variable cost. Everything depends on the volume. We do not have anything related to volume right now, but in option number A, you can see they have mentioned as a universal factor, any factor, right? But if that particular factor is affecting my revenue or my variable cost, everything in CVP model depends on my two inputs, sales price per unit and variable cost per unit. Perfect. You can read this out, okay, just to build your concepts, why the option number A is correct. Okay. Which of the following result in an increase in the break even point? Which of the following result in an increase in a break even point? Perfect. Let me show you again. Our syntax: sales minus variable cost, contribution margin minus fixed cost. How we can calculate our break even? Break even is when your operating profit is $0. So what you have to do is your contribution margin should cover fully. This is your bucket, let's say for fixed cost. You have to cover it fully, right? Nothing should be left in contribution margin bucket. Then you can say your operating profit is $0, right? Now, for break even point, your total contribution margin should be equal to fixed cost, right? Your total contribution margin should be equal to fixed cost. If your contribution margin, how you can decode this total contribution margin? When you have contribution margin per unit number, $2 per unit, $3 per unit, right? Multiply by the volume you have, whatever you are selling, your sales unit volume, you will get your total contribution margin. So I can just bifurcate this number as contribution margin per unit multiplied by the volume X equal to fixed unit, fixed cost, sorry, not fixed unit. If I have to calculate this break even point, I have to divide this contribution margin with fixed cost. So this is my break even formula, contribution margin. In numerator, we have fixed cost. Same thing. If my denominator goes up, I will see a negative impact in my result, which is my break even. My break even will go down. If my contribution margin decreases, I will see again a negative relationship, break even will increase. If my fixed cost, if you have a direct relationship with your numerator, you have an indirect relationship with your denominator, normal mathematics, okay? Fixed cost will increase, my break even will increase. Fixed cost will decrease, my break even will decrease. So you need to have this idea with you whenever you are solving this kind of questions. My cost per unit decreases, which means they are talking about variable cost. If your variable cost will decrease, your contribution margin will increase, right? If this is 100%, this is 30%, and this is 70%, if this is decreasing to 20, this contribution margin will become 80%. Perfect. Again, a indirect relationship. And sales price remains changed. So my break even point will increase if my contribution margin increases. No, we have already seen this concept. Contribution margin if increases, break even will go in downside because they have a negative relationship. So this option is not true. Cost per unit decreases. Okay, same. And sales price increases. Again, if sales price increases, variable cost will decrease. Your contribution margin is gonna increase, right? When your contribution margin increases, which is your denominator, break even will rise, right? Sorry, break even will decrease, my bad. If your contribution margin, which is your denominator, will increase, your break even will decrease. Perfect. If your cost per unit remains unchanged, it means your variable cost will unchanged, your sales price increase. Again, if your sales price will increase, variable cost is unchanged, contribution margin will rise. If your denominator will rise, break even will decrease. I guess you are getting the relationship between all of them, right? That's what I'm going to like my motto to teach you. Lastly, cost per unit increases. Wow. And sales price remains unchanged. This is interesting. If my variable cost will increase, my sales price is constant. So it means this is 100, this is 30, and this is 70. If this increases to 40, this will become 60, right? And if my contribution margin decreases, my break even will increase because they share a negative impact. They share a negative relationship. I guess I am making sense. I'm investing this much time on this question, right? Because you are gonna see this kind of question in your CVP analysis later on. So at that time you can do this very very quickly in few seconds. Nice, perfect. So we are right. Option number C is correct. Please try to read your explanations to make your concepts robust. Next, what aspect of CVP analysis is represented by the number of unit produced or the number of unit sold? By the way, we have a assumption in CVP model. Whatever you are producing, we are selling, right? This is our first assumption. We are not keeping anything in our inventory. Perfect. What aspect of CVP analysis is represented by the number of unit produced? The behavior of cost, no way. There is no connection of number of unit you are producing to your behavior of your cost. The contribution margin that covers fixed cost, yes, it can be possible, because if your contribution margin rise because of the number of unit increases, right, you have to uh, you can cover fixed cost very very easily. The activity level in the business process, the target profit for the organization. Okay, if you're talking about analysis, not calculation, if they have written CVP calculation, I'll go with this option, right? But they are talking about CVP analysis. So if you are talking about some uh, number of unit production or volume uh, sold, right? I will say this will be activity level in the business process. Anyone? Do you guys have any input for this question? Any guesses? No? Okay. So we can go with the activity level in the business process, right? Because your volume is gonna decide your relevant range. Your volume is gonna decide your contribution margin, total contribution margin, and your operating profit, because fixed cost is gonna be same. So activity level in the business process is correct. You can read this uh, explanation. You can see in CVP analysis, the volume component refers directly to the level of operational activity, which is mostly commonly measured by the number of unit produced and the or sold. Very good. Please try to read these exam tips. It will definitely going to boost your preparation level. Let's move to the second question. All of the following statements are valid assumptions used in CVP analysis. Okay. So we have already discussed, I guess, 7 to 8 CVP assumptions in our very, very first class. As production and sales volume increases, total variable cost will increase, which is very good. Okay. If your units are going from $2, the variable cost, if you are producing 200 units and your variable cost is, let me show you on the whiteboard. So your variable cost per unit is always gonna be fixed. Okay, if you are selling at $2 per unit, no matter you are selling 200 units, you are selling 300 units. Okay, variable cost per unit is gonna be constant, but your total variable cost, which is your TVC, will fluctuate with your production. So if you are selling 200, multiply by 2 units, the total variable cost is $400. But if you increase your volume to $300, you will see the total variable cost is $600. So variable cost per unit is same, is constant, but your total variable cost is fluctuating from 400 to 600 as you are moving your production level. So assumption number one is perfect. but we are chasing except. It means the incorrect option. As production and sales volume increases, the variable cost per unit will remain constant. Variable, okay, we have already covered this. Variable cost per unit is gonna be constant. As production and sales volume increases, total revenue will increase. Obviously, total revenue will increase if your production increases. As production and sales volume increases, the fixed cost per rate per unit will increase. Fixed cost can never be a a like normally increased if we are talking about CVP, because in short term most of your cost will is gonna be fixed, right? You can't change your cost in short run. So this option is correct for this discussion. Perfect. Just make sure you are uh, very careful in reading these kind of question where you have per unit options, where you have total options, okay, for the same, for the variable and for the per unit variable. So this is where you will get confused. Okay, next, again we have some kind of a numerical question. Perfect. I have to calculate what quantity will company have to sell to break even. I always check. This is my second check from now, right? I have to see what I have to calculate, which is the quantity or maybe break even. Then I see, okay, I need only units. So now it's very confirmed. I need to calculate break even units. Now for break even units, our formula is fixed cost divided by contribution margin per unit. Simple. Now I just have to chase these two variables. So my fixed cost is 110 for a fixed administrative support cost and 150K in my production cost. So I have to add these two costs. It will be 100, 200, 260K divided by, I just need contribution margin per unit. My selling price is 500. My variable cost is $100 per unit. My variable contribution margin per unit is $400. Let me read this question again. It looks very simple, right? Uh, okay, new product, marketing manager forecast 500, sales price, variable cost 100. In addition, this is our fixed cost with quantity. Okay, it's a basic simple question then. 260K divided by 400, which is 650 units, which is my option number A. Perfect. Simple question, okay? Again, another numerical question. We have to calculate break-even point again. Okay, perfect. For break-even point, you have to see fixed cost and contribution margin per unit. My fixed cost is $3,000, right? You can see fixed cost of $3,000 here. My contribution margin is 100 minus 75, which is 25. So 3,000 divided by 25, it's 120. Perfect. You can see we have a total quantity as well with us, total quantity of 150 units, which is a distractor. Okay. So sometimes if you are very uh, comfortable with your formulas, you need to have that understanding that there are some distractors in the question as well. You don't have to use everything. Perfect. Okay, which of the following is not an underlying assumption? Again, we have assumption question. Changes in activity and other factors affect cost. When more than one type of product is sold, total sales will be on a constant sales mix. This is our assumption, okay? Our sales mix should be constant whenever we are solving more than one type of a product. All costs can be classified as either variable or fixed with reasonable accuracy. ठीक है, ये भी सही है. The behavior of both cost and revenue is linear, right? You have already learned about this term linear. If my sales are increasing by $100 and if my variable cost is a 30%, let's say, of my sales, my variable cost is going to be increased by $30, which is a 30% of $100, right? It should be in linear percentages, right? It will go like hand in hand. So changes in activity and other factor affects cost. It's it's wrong. Okay, perfect. We are good. You can learn, try to read this out and understand why some option is correct and why the other threes are incorrect. Okay, again a question, numerical question. How many patties must Bobby's sell to break even? Okay, and I have to calculate in patties. It means in units. So again, I know I need fixed cost divided by contribution margin per unit. We have fixed cost ratio based on a budget of 125, which is 15%. Okay, I don't have fixed cost as of now. Okay, I have fixed cost as well, which is annual fixed cost of 150K. Perfect. This is my fixed cost. Contribution margin per unit I need. Variable cost ratio is 75%. Sales minus variable cost divided by contribution margin. This is 75, which is 0.75. But for the sales, you can see we have a fixed cost ratio. How we can calculate ratio? You haven't heard about fixed cost ratio, I guess. Okay, but you have seen contribution margin ratio, variable cost ratio. So the concept is same, right? Sometimes you're gonna get a operating profit ratio as well. So don't uh, frustrate on that thing that I don't know about this term. Just understand that if we are calculating ratio and my base is sales in my whole syntax, in my whole contribution margin income statement, the ratio means simple. If I have to calculate sales percentage, I will divide sales by sales number. If I have to calculate variable cost ratio, I will divide by sales number. If I have to calculate contribution margin ratio, I will divide by sales. If I have to calculate fixed cost ratio, simple, I have to divide it by sales. So my fixed cost ratio formula would be equal to my fixed cost divided by my sales, right? So in this question, I guess we have to use this formula. Let's see what we have. So basically my fixed cost ratio is 15% and my fixed cost is 150K. So I will calculate my sales this way. FCR is 15%. Please feel free to raise your hand if you are not understanding anything. I will repeat for you. 15% and my fixed cost is 150K divided by my sales, which I have to calculate. Now let's swap these two numbers by each other. 150K divided by 15% is nothing but 0.15. Okay, 150,000 divided by 0.15, which is a million. A million. Okay, perfect. This is my sales amount now. Okay, revenue or sales. Now what I have to calculate for break even is contribution margin per unit. I do not have anything related to contribution margin till now. But I have my sales number with me. Okay, what is this 600K number? Okay, this is a break even revenue. Okay, we have another information now. Second information is of break even revenue. Whenever I see any type of formula, break even revenue is not a part of our syntax, not a part of our income statement, right? So whenever I see this number, I'll immediately write my formula first because I know I can't do anything to my income statement from break even revenue, but I can do many things with my fixed cost and with my contribution margin ratio. So let's calculate our contribution margin ratio first. Break even revenue is 600K. Fixed cost is 150K, right? Already mentioned in the question. We can calculate CMR. Let's swap these two numbers down. I have to divide 150K by 600K, 0.25. So my contribution margin is 0.25 percentage. Okay, let's move forward. Now, I have 1 million in my sales and my contribution margin ratio is 25%. So first, let's calculate our contribution margin number. How we can calculate contribution margin per unit? It's uh, sales divided by contribution margin ratio. So my sales is 1 million divided by contribution margin is 25%, which is 0.25. Mhm. We have to multiply. We have to multiply by contribution margin. Okay, I'll show you this formula. Okay, so this is my sales, this is my variable cost, this is my contribution margin per unit. To calculate contribution margin ratio, what we do is we divide everything by sales, right? So contribution margin per unit and divided by sales. So right now we have sales 1 million, we have contribution margin ratio. So we have to multiply these two numbers to calculate this. Okay, that's where we are making mistake. So 1 million multiplied by 0.25, which is 250k. Finally, we have our contribution margin per unit, which is 250k. We have our fixed cost as 150,000. This is not a contribution margin per unit, but it is a total contribution margin.
अ, हम इसको इस तरह से ही कर सकते हैं। हम अगर
Mhm,
जैसे अगर हम सेलिंग पर यूनिट निकाल लें,
mhm,
10 लाख डिवाइडेड बाई 12,500, कितने
mhm,
हम बर्गर सेल करें वो 12, तो हमारा आंसर आएगा 8। 8 में 8 इंटू 75% करेंगे हम वेरिएबल कॉस्ट,
mhm,
सेलिंग प्राइस इंटू 75%, तो हमारा आंसर आएगा 6। तो कॉन्ट्रीब्यूशन विल बी सेलिंग प्राइस माइनस वेरिएबल, 8 - 6 is 2।
mhm, mhm,
सो ब्रेक इवन यूनिट्स हमारे
75.
या
Okay,
75,000।
okay, perfect. Yeah, we can go from this method as well. Okay, so if we have break-even revenue, I guess we don't have to use this break-even revenue to calculate contribution margin per ratio because we have variable cost ratio with 75%. So if my sales is 100% and my variable cost is 75%, my contribution margin is directly 25%, right? So we have uh, use the distractor, but okay, we have 25% with us and now our contribution margin total is 250k. Now if you see our total units of burgers is 125,000. So if I have to calculate per unit of this amount, I can just divide it with 125. 125 1, 125 2 is 250. So my contribution margin per unit I have is $2. My fixed cost is 150, 2 and 75,000. So my answer will be okay, we have 75,000 patties in option number D. Perfect. Wow, please ignore this. Proceed to next question. Now we have to calculate what is the variable cost ratio. Okay, now you are very, very comfortable with ratio kind of thing. Anything can be come up as a ratio. And you need to know in my whole income statement, everything start with sale. So if I need to calculate any type of input ratio, right? So what I can do is I can just simply divide it by sales. So my variable cost ratio formula will be variable cost and divided by sales. Simple. Now, if you see, I have total fixed cost. We don't need this. We have break even revenue. Okay. And we do not have contribution margin. Perfect. My sales, my variable cost, my contribution margin, and my fixed cost. Fixed cost is 225,979. Okay, this is my fixed cost already mentioned here. Total fixed cost is 225,979. My break even revenue is 389,619. If we are talking about break even, obviously my operating profit is $0. Okay, Now, uh, we do not have variable cost and my contribution margin ratio. Anyone, any idea what we can do? We have sales, but we do not have variable cost.
कंट्रीब्यूशन मार्जिन रेशियो को अगर हम 100% एज्यूम करें
Mm-hmm.
एंड फर्स्ट ऑफ ऑल ब्रेक फिक्स कॉस्ट डिवाइड बाय ब्रेक इवन रेवेन्यू, तो
Mm-hmm.
हमें उससे कंट्रीब्यूशन मार्जिन रेशियो मिल जाएगा. तो टू 22,225,979 divided by break even revenue is 388,619. So that will be around 58 percentage.
Mm-hmm. And
एंड
the remaining.
वेरिएबल कॉस्ट को हम निकालने के लिए हम सीएमआर को अगर हम 100 कर रहे हैं एंड प्लस, जस्ट अ मिनट में सॉल्व कर रहा हूँ.
Okay, I guess you have started it very, very correctly, Krishna, but you don't have to take it contribution margin as 100%, okay? Uh,
ओके.
this is my sales, this is my variable cost, this is my contribution margin, and this is my fixed cost. I have break even revenue as 389. Okay, Rafia have commented something. 389619. This is my break even revenue, okay? And as soon as I see break even revenue, I know this is not a part of my income statement. I need to write the formula because I know I can calculate something important. So I have my fixed cost, I have my break even revenue, I have to calculate contribution margin ratio. So I can just swap these two numbers here. Now my formula will be for contribution margin ratio is fixed cost divided by break even revenue. Now let me just calculate this. It's 225,979, which is my total fixed cost, divided by my break-even revenue is 389,619, 0.579%. Okay, and around 58%. Okay, now if contribution margin ratio is 58%, you can see if this is 58% and this is 100%, so the remaining part is variable cost, right? So 100 minus 58 will be 42, 42 percentage. Perfect. You can see in option you have 58% as well because uh, our CMR is 58%, but our answer should be 42%. Perfect. Nice one, Krishna. But please avoid taking CMR as 100% anytime, okay? Because your sales should be your 100% whenever you are solving these percentage type questions. Proceed to next question. Which of the following is a formula for break even point in sales dollars? Okay, so we have already solved this question. Break even point, we need fixed cost divided by contribution margin ratio. Simple. Livingston company has fixed cost of $60,000. Variable cost is 70%. To break even, again similar question, okay? Let's see. Mhm. Let's see, we have variable cost ratio at 70%. So if my variable cost ratio is 70% and my sales is 100%, my contribution margin will be 30%. Simple. Sales minus variable contribution margin. To break even, we need a dollar revenue. So break even revenue is fixed cost divided by CMR. So we have everything in our question here. We don't have to write anything. 60,000 divided by 0.03, sorry, 0.3, 30%. $200 should be our answer. Perfect. Let's move forward. Okay. CVP analysis is based on the key activity of an organization. The key activity for Delightfully Soft, this is company's name, I guess, a feather pillow manufacturer, perfect, would most likely be. Okay, there is a company called Delightfully Soft. They manufacture feather pillow. So for them, the key activity will be labor hours. No, it depends on how much volume you have. It's number of pillows. Perfect. I guess this can be an option. Let's move forward. Pound of feathers. No, this is just a raw material. It depends on volume, right? If I have to produce 500, I will order 500 units of volume. If I have to fluctuate anything in terms of volume, this can never be a primary factor. Key activity. Selling price per pillow. No, number of pillows should be your answer. Perfect. Which of the following statement accurately describes the cost behavior of variable cost in response to the change in business volume levels that take place within the relevant range of activity? Okay, this is a very important question. Okay, please, everyone, pay your attention. Variable cost per unit change. No. Variable cost on a total and per unit basis both remain constant. No. Variable cost on a total and per unit basis. nahi. Variable cost on a per unit basis remains constant. Perfect. Simple question. Okay, now again a numerical question. Now we have to calculate a new contribution margin ratio. I guess we have some old information, so we can see old contribution margin and new contribution. Selling price is $200. Contribution margin is zero point 0.4. Okay, it means my variable cost is zero point 0.6 and this is 1. Simple. Now variable cost are expected to increase $10. Okay, we have to calculate it. 200 multiply by zero point 0.6, which is 120. Now it will increase by $10, which is 130. Okay, no change in selling price. Perfect. So selling price will be 200 only. So this time my contribution margin is 70. How we can calculate contribution margin? Just divided by sales number. Now you guys have your concept with you. I'm not gonna use the long method every time. 70 divided by 200, 0.35. Same answer. You have to solve this kind of question in 30 seconds. In exam, you will have 30 to 40% as a easy to a little bit moderate level. Okay, you have to solve this question in less than 1 minute. Okay, 1 minute is a maximum uh, ceiling for you. So 30 seconds to 1 minute you have to target. A company plan to offer a product for sales. Okay, again a question. Okay, this one is a retired CMA question. Let's see. Perfect. My marginal income. Okay, I don't need to see tax rate, but I have to calculate first. What would be the product's contribution margin per unit? If variable cost is $4, fixed cost we have, sales price we have. Oh, what we have to do? It's 9 minus 4 directly. We have to calculate contribution margin per unit. $9 is my sales, variable cost is 4%. Uh, Tax rate, this is the distractor, okay? You don't have to calculate as tax percentage. So right now, I guess you have the idea. In question, sometimes you will have a distractor or something you don't need to use, right? Because every time we like feel, okay, I guess I am missing something, right? I have to use this as well. I am making something, my calculations incorrect. So you have to have that understanding that sometimes you will have distractors in option. You will see this is the very easiest question, okay? I'll not give this a 1 out of 10 as well. Okay, it's level 1. Which best describes costs that vary in total directly and proportionally with changes in activity level? Okay, if my activity level increases or decreases, fluctuate, what will be uh, which cost will impact it directly and will increase proportionally or decrease proportionally? Obviously, it's gonna be variable cost only. Fixed cost, no. Mixed cost, we don't use. It is our assumption. We are gonna focus on only two costs, which is variable and fixed. Okay. In part one, you will see mixed cost and semi variable cost as well, and the calculation behind them. This time, variable cost is our answer. Okay, now again, numerical based question. Now I have to calculate LPG's new again. Whenever you see new, you have to have that understanding that something old is there in the question. So just make two lines, one for old and another one is for new. My currently contribution margin per unit is 25%. So my old 25% is my contribution margin. Say it is considering increasing sales commission from 4 to 7. Sales commission is your variable cost, okay? Because if the salesperson is selling 10 units, he will get $4 on 10 units, right? If he sell 20 units, he will get 20 into 4. So that means it is fluctuating with unit. That means you have to consider sales commission as your variable cost. And reducing sales salaries. Oh wow, this is a very good question here. Sales salaries is gonna be fixed, okay? Salaries are not dependent on your work, on your how much sales you have did in that particular month, right? So salaries will be your fixed cost. As we have to calculate only contribution margin per unit, I'm not even taking salaries into my consideration, okay? uh, Contribution margin is 24 unit when my variable cost is $4, when my contribution variable cost jumps to $7, then what I have to calculate here, if both of these changes are implemented, what will be the LPG's new contribution margin per unit? Am I missing something? uh, it is 25. Okay, if it is increasing by $3, so your contribution margin will decrease by $3, right? It's $22. Simple. Easy question, right? Okay, again, we have, I guess I don't have to calculate as well. Let's see. Daniel is planning to rent a car for an upcoming 4-day business trip. Perfect. 4-day business trip. Car rental agency is charging $29 per day. Okay, this is my fixed cost. Okay, I have to pay $29 whether uh, the car is like in my parking or maybe I am riding it the whole day. I have to pay $29 flat. This is my fixed cost plus $0.12 per mile. Perfect. This is my variable cost. This depends on how much I am traveling in my rental car. Daniel plans to drive 140 miles day one. Okay, we have some kind of information. Okay, I'll use my calculator directly. 140 miles day one, 15 miles day two, 15 miles on day three, 140 miles on day four, 310, and my variable cost is 0.12. My flat fee 29 for 4 days. Okay, I need this answer from you guys. Anyone, please. What should be the answer? Anyone? Easy question. Okay, so basically I have added all the miles he drove. Okay, 140, 15, 15, and 140. I have multiplied it by 0.12 because the rental agency is charging $0.12. Okay, Rafia said 37.2. Perfect. 310 is my total miles multiplied by 0.12. We have an option for 37.2. Perfect. So what mistake you can do, okay? You will calculate $29 multiplied by 4 as well. Let's say the question will uh, ask you total fixed cost. Then your answer should be 29 multiplied by 4. If the question will ask what is the total cost, your answer should be 29 multiplied by 4 plus जो भी अभी राफिया ने बताया which is 37.2, which is her variable cost, right? But the question is asking for total variable cost. Please, you have to be very, very careful on what you have to calculate. Because if you solve three of the types, total cost, total fixed cost, you will get the options here. So it's not like you will uh, have some incorrect number on your rough copy, right? Wherever you're solving, you will have the same option which you have in ABC, but the answer should be option number T, which is why you need to focus a lot on what you need to calculate. All of the following questions to calculate operating income are valid except, okay, if I have to okay, this is a formula based question. Revenue minus variable cost minus fixed cost. This is a very uh, good example of calculating operating income, right? Revenue minus variable cost is your contribution margin, and contribution margin minus fixed cost is your operating income. Simple. Gross margin minus fixed cost. No way. Contribution margin minus fixed cost. Correct. Contribution margin rate multiplied by volume minus fixed cost. Correct. This is your incorrect option. Okay. Make sure you're reading that you have to calculate, you have to mark except or something which is not correct. So gross margin is a cost based accounting concept. Okay, we use it in a income statement, and in your part 2 you're not solving or understanding anything related to accounting. You are understanding in a on a with a hat of strategic accountant, right? Who make decisions, who make strategies, who do analysis. In part section number A, you do have section number A and B, you do have some kind of accounting, but not in terms of you have to create ledgers, profit and loss statement, and journal entries. So gross margin is a concept of cost of goods sold, which you have to present in your income statement, right? Okay. My next question is, fixed and variable cost behave differently with respect to levels of output. Which of the following statement is true as output increase or decrease within the relevant range of, I guess this is again the same question. Variable cost per unit decreases as output increases. Per unit cannot be changed, bro. Total fixed cost increases. No. Total variable cost increase as output increase. Yeah, this is correct. Fixed cost per unit. No, fixed cost cannot be changed. This is my correct answer. If a company's variable cost per unit has increased, then the, okay, we have already seen the relationship between sales, variable cost, contribution margin, break-even revenue. So I guess now it will look very, very easy to you guys. Company's variable cost per unit increases. My contribution margin will go down. That part I know. Per unit increase, no. Contribution margin increase by the same amount. Considering my sales are gonna be constant, then I can go with this option. Contribution margin per unit will not change. Incorrect. Company's fixed cost will increase. This is the correct option. All of the following statement concerning fixed and variable cost are, you will get one question for sure, right? For testing your understanding of fixed versus variable cost. So you need to be have full context how fixed costs work, how fixed costs fluctuate, how variable costs fluctuate. I guess we can cover everything in level 1 questions only. In shorter period, a greater percentage of companies' cost tends to be fixed and then tends to be variable. Okay, I'll explain you these things. Period of time does not typically affect. This is the very incorrect statement. Period of time is the only factor you can uh, that will make some cost variable and other cost fixed, right? Otherwise, every cost is variable in a long term, because in 10 years I can change the factories, I can change my product, I can switch my business. Okay, so my every cost is variable in a long run. In longer periods, greater percentage should be variable and other costs are fixed. No, shorter period, a lower percentage of companies cost of variable then tends to be fixed. Okay, I'll explain you this question. So basically they are testing your variable cost versus fixed cost understanding. So please see any business, and we are talking about short run, okay, in CVP analysis. So in short run, your every cost, right? Every cost will be fixed. This is our assumption. Every cost will be fixed. But the only cost which fluctuates with your volume, right? Which depends on whatever you are doing, how much business you are doing on a daily basis or on a monthly basis. Only those costs can be variable. Otherwise, every cost is fixed in short run. In long run, you can say, right, every cost, like larger proportion of great, okay, you see how they use the wording. Greater percentage of a company will be variable, and only few costs will be fixed. Perfect. And in a long, long run, okay, if you see 10, 15 years, every cost is variable. That's how the cost structure works. If you know these three topics, I will definitely say you're gonna kill every variable cost versus fixed cost questions. Okay. So first thing is, in short run, every cost is fixed. Just some cost which depends on volume will be variable cost. In long run, larger proportion of your costs are variable and some costs are fixed cost. In longer run, okay, every cost is variable. That's the concept. So if you see first option, in shorter period, greater percentage of a company cost tend to be fixed, which is correct. Then tends to be a variable. Oh wow. Okay, my bad. I have to choose accept option and we have choose the correct option. Okay, I guess I have to follow my instructions first. Perfect. I guess I am making sense, right? Right now you have the idea of how variable cost versus fixed cost works. Done. Let's proceed to next question. Which of the following statement is correct concerning contribution margin per unit? Contribution margin per unit represents the selling price left over. Okay, let me first see. I don't have to choose accept option, right? Perfect. Contribution margin per unit represent the selling price left over after paying the variable cost related to, ठीक है, perfect है. हाँ तो यही है फिर तो correct option. Contribution margin per unit represent the total revenue left over after paying all variable cost incurred in a period. No, no. Total revenue cannot be a factor to calculate per unit. Okay, every variable should be in same number, same input. Okay, contribution margin per unit represents the selling price left over after paying the cost. They haven't mentioned which cost, so I'm assuming they are talking about total cost, which is not a factor. Fixed cost comes after contribution margin. Represent a total revenue, again total revenue, no, selling price left over for contribution margin per unit. Perfect. Proceed to next question. Which of the following would result in a decrease of a company's contribution margin per unit? Contribution margin per unit can be, okay, it can be decrease when my sales price will reduce or my variable cost will increase. Only to these two factors. So decreased sales commission, it means variable cost is going down. No, variable cost, if variable cost is going down, my contribution margin will increase. They have an indirect relationship. Decreased profit, profit is not even a factor to calculate contribution margin. Increase fixed expense, no. Increase variable cost per unit. Perfect, simple. Under which of the following circumstances would a company's contribution per unit remain unchanged? Okay. If my fixed cost remains the same, but all the other costs decrease. No, if variable cost will increase, contribution margin will fluctuate. If variable cost per unit decrease, no, unchanged nahi rahega. Fixed cost decrease, but all the other cost remains the same. Okay, this can be our option. Anything happen to fixed cost, right? It doesn't affect my contribution margin. If variable cost, no. This should be my answer. Perfect. Which of the following examples correctly correlates a unit of activity and a variable cost at a coffee shop chain? Okay. unit of activity, keep activity for a coffee shop, and a variable cost. Number of employees, no. Cost of power usage, no, no. Number of employees, you have to pay salaries, that's fixed cost. Number of customers and number of disposable cups. I guess this can be a factor because for a restaurant or for a coffee shop, their volume is depends on number of customers, right? And their variable cost is cost of disposable cups because they have to serve coffee in cups, right? Number of tables, no. Number of coffee making machines, everything is fixed. This should be the answer. Which of the following statements about contribution margin is true? Again, same kind of questions. Okay. A decrease in variable administrative expenses. We have to select following statements about contribution margin. Okay. Decrease in variable cost will decrease. No. Decrease in fixed. No, no fixed. Increase in variable cost will increase. No. They, variable cost and contribution margin share a negative impact, negative relationship. So they can't be same. Decrease, decrease, increase, increase. Fixed cost can never be a part of the discussion. A decrease in variable cost per unit will not impact contribution margin per unit. Okay, this this also cannot be our answer. A decrease in fixed administrative expenses per unit will not impact. Okay, fixed cost one uh, cannot impact my contribution margin per unit. Which of the following statement accurately describes the cost behavior of fixed cost in response to change in business volume that take place within the relevant range of activity? Okay, fixed cost cannot be changed. Will increase, decrease? No. Remains constant? Yes. Okay, less than 30 seconds. All of the following statement concerning break-even analysis are true, except, okay, I have to select wrong option. Contribution margin per unit is used to determine the number of units that need to be sold. Yes. Gross margin? No. Everything relates to gross margin, gross profit, cost of goods sold. We are using variable cost income statement, right? Variable costing, not ABC costing or any other type of costing we have. If a product's variable cost per unit increases, but its unit selling price remains constant, what happens to the contribution margin? सिंपल है. अगर वेरिएबल कॉस्ट इंक्रीज होगा, सेलिंग प्राइस कांस्टेंट है, my contribution margin is going to decrease. Contribution margin per unit will decrease. Perfect. Less than 30 second, okay, for these kind of questions. Okay, again numerical question. We have to see WEQ, new contribution margin per unit. Okay, so I guess we have some kind of old question and some new information. For old contribution margin, again this is the same question we have already solved. This question, I guess, just the company is different. So this is $50. My shipping cost is decreasing from 9. Okay, it's very, very simple. 9 to 5, $4 decrease. My contribution will always decrease by same linear assumption. Uh, $46. I guess I'm not making any mistake. Okay, I don't have any $46 per unit. Okay, contribution margin per unit is $50. My shipping cost, which is my variable cost, okay, because how much business I have, how much I have customers are purchasing from us, we have to ship. So shipping cost is gonna be your variable overhead cost, which is your part of a variable cost only, and increasing fixed administrative cost. If both of these changes implemented, what will be the WEQ's new contribution margin per unit? So for fixed administrative expenses, we don't have to do anything. From 9 to 5, it's 4. And from 50 to minus 4, 46. Anyone, if I'm missing something, I'm getting $46 per unit. Rafia, Krishna, It is considering decreasing shipping cost from $9 to $5 per unit and increase in fixed cost, but fixed cost will never be a part to calculate your contribution margin per unit. If both of these changes are implemented, let's go with some closest option 45, right? Which is a very bad approach, but my mind is not working right now for this question. Okay, it's 54. Oh, such a big blunder. Okay, please see here. If my variable cost is decreasing, okay, here if my variable cost is 9 and my sales is 59, right? 59 minus 9 is 50. Sales should be same, which is 59. My variable cost is 5. It should be 54. Okay, my bad. $54 per unit should be your answer. Variable cost and contribution margin per unit always share a negative relationship. So if it is going down by $4, you have to increase your contribution margin. Which of the following statement about contribution margin is true? Let's skip this question. Which statement, okay, we haven't solved anything for contribution margin ratio. It is difficult to calculate, not for us. It is useful in calculating monthly fixed expenses. Nahi. It is useful in determining the profit increase from a given increase in sales dollars. Okay, this can be our option. It is useful. No, contribution margin ratio can be useful in determining your profits. Okay, how much your sales increases, how much your revenue increases, and you have a contribution margin ratio, let's say 30%. The same increase you are gonna see on your contribution margin. I guess we have covered this topic today as well. The same you are gonna see on your contribution margin increase and decrease, and same you are gonna see on your profits. Proceed to next question. 340 minus 160, and then you have your difference. Okay, I'll calculate 340 minus 160, 180, and you have to calculate in a percentage term, just divided by 340. Okay, contribution margin per unit divided by sales. So 180 divided by 340, your answer is 52.9 percentage. Proceed to next question. When unit selling price remains the same and dash the contribution margin per unit. Okay, okay, sales price if same, variable cost should increase. Variable cost per unit increase. Perfect. We need to calculate contribution margin ratio. I'm skipping these kind of questions. Okay, I guess now we have covered everything in relation to like level 1 questions. So fixed costs are 100K. What should be my contribution margin per unit? Again, break even point in revenue for a product. Okay, this question we can solve. Let's see. I have break even revenue. Whenever I see break even revenue, first thing I'll do to write my formula, which is fixed cost divided by contribution margin ratio. I have fixed cost, I have break even revenue, I can calculate my contribution margin ratio. Perfect. My break even revenue can swap with contribution margin ratio. So I have to do fixed cost divided by contribution margin ratio. So 100K divided by 250K is 0.4. 0.4, 0.40% is my contribution margin ratio. My product sales price is 25 per unit. Okay. Now, if you know, contribution margin ratio can be calculated as contribution margin per unit divided by sales price per unit. I have sales price per unit. I have contribution margin ratio. We just need to multiply to calculate contribution margin per unit. 0.4 into 25, my answer should be $10. B option. Perfect. Proceed to next question. Okay, again we have some numerical. Let's solve it. Question. Calculate the increase in operating income. Increase. Okay, I guess we have some old information, old profit and new profit. Contribution margin of the shop is 45%. 45%. They want to increase the shop's sales revenue by $15,000 without increasing fixed cost. calculate the increase in operating income. Okay, now they are testing the same theoretical question in a numerical way. Okay, please pay your attention. My contribution margin ratio is 45%. If they are increasing sales by 15,000, okay, this is a increase, incremental. 15,000 is incremental. I've already discussed this concept. Whatever is adding here or reducing here, considering my cost are fixed, will be same in a linear way, have an impact on my contribution margin and my operating profit. I just have to calculate 150K multiplied by 45%. 15,000 divided by 0.45, which is 6750. So my uh, operating income will increase by 6750. Perfect. Again, shorter time frame and longer time frame question. Please uh, look into these questions, this type of question. Okay, this is good. Corporate income tax rate increase. What is the most likely result? The units need to be sold to break even decreases. Okay, the units needed to be sold to break even increases. Perfect. The units needed to be sold to break even does not change. The units needed to be sold to earn a target net income does not change. Rafia said C. Okay, let's go with C then. Because corporate income tax rate comes after your pre-tax profit. Okay, so in your break-even concepts, you are only using fixed cost in your numerator plus your pre-tax target profit and divided by contribution margin per unit. So if anything which is not related to these three components, your break even is not gonna change. Perfect, Rafia. If a company, okay, we need to solve tax based questions a lot. Question, we have to calculate what amount of pre-tax operating profit is it? Pre-tax profit we have to calculate. Okay, let's go with a shorter approach. What is my after-tax profit? 34,000. Perfect. What is my tax rate? 30%. How much is the leftover if I reduce it from 100? 70%. So I just have to divide 0.7. 34,000 divided by 0.7, which is 48,571. Perfect. Okay, again 30 second. Product cost has sales, contribution margin, margin of safety. This question is good. Whenever they uh, use two, three concepts in a question, you have to connect everything together. So I need to calculate fixed cost. Okay, we have to calculate fixed cost. Margin of safety I have. So again, margin of safety is not a part of your income statement. So first thing what we are gonna do is let's write its formula. Planned revenue minus break-even revenue. Now, margin of safety is $80,000. My normal sales is 200K minus my break-even revenue. I do not have break-even revenue. Uh, okay, but I can calculate my break-even revenue now from these two things. So 80,000 and minus 200K, 120K will be my break-even revenue. Now I have break-even revenue. Again, break-even revenue is not a part of my income statement. I will use formula to calculate some important variables. So this is my formula for break-even revenue, fixed cost divided by contribution margin ratio. Break-even revenue is 120K, okay? Fixed cost we have to calculate, but I have contribution margin which is 20%. So I have to just multiply 120K on 20%. 120K multiplied by 0.2, which is 24,000. So my fixed cost is 24,000. Perfect. Rate. Torix inclusive produces stereo speakers. The selling we have selling price. We have to calculate margin of safety in dollars. Again, same concept. Margin of safety. We have to calculate. Okay, I'll always double check what I have in my option. I have to calculate in dollar terms, so I can use planned revenue minus break even revenue. Let's find out our inputs. Fixed cost per month is $49,000. Selling price 1,300. Okay, so for break even revenue, we need fixed cost divided by contribution margin ratio. Okay, and for contribution margin ratio, I need sales minus variable cost, which is contribution margin. Then later on I can divide it by sales just to calculate CMR. Perfect. 100,000 minus 300. 1,000 is my this sales, 300 is my variable cost. My contribution margin is 700. If I divide 700 by 1,000, easy, 70%. My contribution margin ratio is 70%. Fixed cost, I have 49,000. So let's divide 49,000 divided by 0.7, which is 70,000. I got my one of the input, which is 70,000. Now planned revenue is company expects to sell 125 unit and 1,000. So 125, 125K. So I'd have to just reduce 70,000 from this, which is $55,000. Perfect. This is a very, very, very logical question. Okay. We have because we have two percentages for margin safety ratio and we have something to solve for theory. Danny owns two companies where he has recently made changes. The margin of safety ratio for company X is 42% and the margin of safety ratio for company Y is 25%. What does this imply about the two companies? Okay, so first let's understand what do we actually mean by margin of safety conceptual wise. So basically margin of safety is a safety net for us. Okay, safety net for us. From my target revenue, I guess we have already covered this. From my target revenue or target units, how much I can lose in sales so that I will do not cross my break even. Okay, this gap is what my margin of safety. The longer the margin of safety I have in terms of dollars or in terms of ratio as well, right, the safer I am. This is what the concept is. So the higher the margin of safety ratio, the better for your company is. Perfect. So company X has 42%, company Y is for 25%. We know who is winning. So company Y could lose more business before experiencing financial difficulties. Wrong. Company Y has lower margin of safety, so they could not lose more. Company X could lose more business before experiencing financial difficulties when compared to perfect. We don't have to read any other option. Following information for the year ending this, but we have to calculate margin of safety again. Same formula. Where is my budgeted sales? We have okay. We have two sales, break even sales and budgeted sales. So they here comes your concepts. Okay, for planned sales, budgeted sales, and actual sales, right? You have to see these keywords whenever you're solving margin of safety question. Minus uh, your break even sales, right? Because we have to calculate break even. Budgeted contribution margin, no. Cash flow break even distractor hai. 300K should be our answer. Perfect. Simple questions. On January 1, Lake Company increased its direct labor wage rate. Okay, variable cost is gonna increase. All other budgeted costs and revenues were unchanged. How did this increase affect Lake's budgeted break-even point? Whenever your okay, direct labor wage rate is increasing. So you first step is you have to identify direct wage is variable cost. If my variable cost increases, my contribution margin decreases. If my contribution margin increases, my break even point will increase. I have to sell more to cover same fixed cost, right? Simple explanation. So budgeted break even point will increase. So I have two options for increase. Margin of safety. Now, for margin of safety will decrease, right? Margin of safety will decrease because my break even point is increasing. So let's say my planned revenue is 2x and my bud break even revenue is x, my answer will be x. But if my break even revenue is increased to 2x, my margin of safety is 0, right? So in mathematical terms, if your contribution margin is going down, your break even point will increase, your margin of safety will decrease. So C option, increase decrease. I guess we are going good. The company's current fixed cost, we have to calculate break even point and margin of safety. Okay, question is looking good. Let's solve it. We have to calculate break even point. Okay, so for break even point in units, we need fixed cost and we need contribution margin per unit. Variable cost is 64. This is 64. Fixed cost is 326. 326 600. Average price is 206, which is my sales price. Okay, I have everything. I don't have to do anything else. 206 minus 64, which is 142. My contribution margin per unit is 142. I have deducted these two inputs. Fixed cost is given 326. Let's divide both of these numbers. 326 600 divided by 142. 2300. 2300. 2300. A and B can be our option. Now we have to calculate margin of safety. We have budgeted revenue and we need a break even revenue as well. To calculate break even revenue, uh, what we can do is fixed cost divided by contribution margin ratio. This is the only option we have. For contribution margin, we have 142, our contribution margin per unit divided by sales. Sales is 206. Let's calculate it quickly. 142 divided by 206, which is 0.68. I guess I'm doing right calculation. 0.68, and my fixed cost is 326 600 divided by 0.68, 480,294. This is my but break even revenue. Now I have to deduct it by budgeted revenue, which is this number, 618,000. 618,000. Okay, I have to calculate margin of safety in units. Uh, Bad day. Margin of safety in units. So I need uh, break even in units. Okay, I already have 142 and I need my planned output. So my budgeted revenue is 618,000 and my sales price is 206. If I divide my revenue with my sales price, I'll get budgeted units as well. 618 divided by 206. 3000 is my planned units. 3000 is my planned units minus what is our break even unit? It's mhm, 618,000 divided by 206. It's my planned output and I have to calculate break even in units. Break even in units is fixed cost divided by contribution margin per unit. I guess I forgot my number. Okay, let's quickly calculate it as well. 326,600 divided by 142. So it's 2300. So my final answer is 3000 minus 2300, which is 700. So option should be break-even point is 2300 tax return and 700 is my margin of safety. All of the following can be example of sensitivity analysis with a CVP framework. Okay, now this is a new concept. Please understand it carefully. Sensitivity analysis you use whenever you are changing your inputs. Let's say you have your sales price as 14, but as a manager you will see what if I increase my sales price by 15. Okay, $1 increase, or what if I change my sales price to 14. So you have to change your inputs to calculate your profits, seeing how much the number of unit needed to break even changes when the selling price increases from. Okay, we can check this thing. Seeing how much the number of units needed to break even changes when the price of material. Okay, we can supplier can also increase their prices. So as a concept of sensitivity analysis, we have to analyze our cost increase and decrease as well. Seeing how much the number of units needed to break even changes when the income tax decreases. Okay, income tax we don't have to look at. Seeing how much the number of unit when my direct labor. Okay, this is my variable cost. This should be our answer. Again, all the following sensitivity. Okay, it's the same question or what? Okay, numbers have changed. I have to use except. Seeing how much the units needed to earn a target operating income. Okay, again variable cost, direct materials, direct labor, and expected sales, and we have units. Okay, uh, this is a part of your sales price. You can look at this is your variable cost. This is again your variable cost in direct labor terms. This is in your direct material term. But if your target is set, your operating income is a target. You can't change your sales volume, right? Perfect. You can't change your sales volume if you have a target with you. So that's a very good question. All of the following statement about the margin safety computation are true, except the margin of safety can be calculated in terms of sales revenue, and the margin of safety measures a change in the income that results from a change of sales price. The margin of safety can be calculated as a percentage. This is right. The higher the risk, the larger the desired margin of safety. This is right. This is right. We have to pick one from B and D. The margin of safety measures the change in income that results from a change of sales price. No. Okay, Rafia, bye. A company currently sells 440,000 units of a product for $25 per unit. We have to calculate should the company reduce its selling price. Okay, this is a very good question where we have to take a decision directly, right? This is where we have to take a decision directly. So we need to analyze whether the changing or reducing our selling price will have some kind of a benefit or not. So you can see the company is currently selling 40,000 units and the sales price is $25 per unit. $12 is my variable cost. I have $13 as my contribution margin. 200K is my fixed cost. I don't have to see it right now. My sales price, if my sales price is $22, the number of units sold will increase to 50,000. If the fixed cost and cost per unit, okay, variable cost is gonna be same, so it's $10. So there is a decrease of $3. Okay, there is a decrease of $3. I just have to calculate 13 multiply by 40 and 10 multiply by 50. So what I can do in a shortcut, this is our incremental contribution margin, this is our loss, and this is the gap. 10,000 is our gap. I guess we have a direct answer. No, because the contribution margin will decrease by $3 per unit. Mhm. Okay, let's calculate operating profit only. So we have to do 13 into 40,000. 40,000 multiplied by 13, which is 520K. 520K, this is for product number one. And for product number two, we have 10 into 50, which is 500K. Now, uh, we have to include fixed cost as well, and it's 200K. Okay, so if you reduce 200K from this number, which is your fixed cost, and 200K because fixed costs are same, you have 320 here and you have 300 here. So your operating profit will decrease by $20,000. Perfect. This is our answer. I guess we have covered a lot of questions for our level one. Again, same margin of safety and something. And after this, in our next session, we can start with our level 2 question. You can see in level 2, you will see some kind of a difficulty. Okay, concept wise, everything is same. We have 41 questions here as well. So we have to spend a lot of time, 1.5 hours minimum in this. And in level 3, we have 18 question. And you can see in level 3, you will see a analytical type of questions. Okay, big questions. So you need to have the understanding how uh, the examiner or IMA basically is using some keywords or maybe making the topics complex by giving you distractors only. Okay. Okay, Krishna, you are the only one who's there. Okay, so we'll continue in our next live session. We'll try to cover level 2 and level 3 questions as well. Okay. Uh, See you there. Bye.